How to spot trend reversals before they happen. If you think it is impossible to short the highest price or to go long at the bottom of a chart, and you think it is not possible, I can explain you it is. And if you are interested to hear this stuff, it is so magic, you will listen to me and to Serge. We translated this video for you with AI, but we explain it so good, and I think you will love it. Thanks a lot for your time.
A warm welcome today for the first time from our new trading location in Larnaca. We've come up with a different story that might help us illustrate things a bit more vividly for you as we explain today how we try to localize highs. Specifically before everyone else catches on, because it's incredibly important and effective. When you realize that global money is starting to lose interest and is about to let go of the top, and since we know that markets always love supply and demand, it's simply a matter of probability. He's back in a big way, but first of all, a warm welcome. Sergey Hoffman, my dear and trusted partner, friend, and esteemed colleague here at Trade the Traders. And yes, I think today we can shed a lot of light for you. Serge, why don't you tell us yourself?
All right, so there are different variations of how you can spot such a quick or, let's say, early reversal. You can recognize an upcoming reversal in the markets. And before I get into it, I want to say that what I'm about to explain and show you works best when you look at everything in combination and not necessarily always individually, even though looking at things individually can also work. But when combined, it confirms everything and makes it all stronger. For example, the first variation, which is really nice, is that you can recognize when the reversal is about to happen. Especially when the reversal is coming, it's simple if you look at it a bit like this. We're always talking about order books and everything, and market profile. That's the first phase where you can also recognize things very clearly. Whether it's a reversal right now, a very high top, for example, a double top, for instance, where you can, sometimes it will break if you see it all as just absorption. In the order book, that means a lot is being bought on the ask side, and then the market basically just stops moving further down. Then someone steps in there to collect everything. I can also explain a bit how you can recognize all of this in the chart or in the footprint. It's quite simple. I'll try to draw it out for you. So let's say we're in an uptrend, and then there's some level where the market just rises in that area. Then we just look directly at this candle. The higher the time frame, the better. Then we simply see, I'll draw it like this. Then we see the candle. And the candle looks like this, and I'll draw it in. And in this candle, everything you see in the code band, everything that's basically on the right side is all market sell orders. Everything we see here are market sell orders. Everything on the right side is, so to speak, at the candle, it's all on the bid side. You can see that, for example, here at the high, in this area up here, let's say here, that's the spread, you can see very, very large volume numbers. For example, 300, maybe even 3,000 contracts being traded up there, so to speak. But in contrast, here, for example, it's very low or even shows a zero behind it. We know that immediately, that in this area, a strong accumulation is taking place. And when we see all this, then at this point, a reversal could take place, so to speak. How far it will go, you never know. Otherwise, we'd have a crystal ball. But there are certain levels you can look at to see how far the whole thing could potentially go, or even be completely reversed. Well, you just have to pay attention to the fact that there's more activity at the top and maybe a bit less at the bottom and at the high. A lot has been tried out there, so to speak, on the upper end.
That's nothing more than a time frame. For example, let's call this a 5-minute candle. And within this 5-minute candle, you can look at how much volume was bought and sold. And that's what Serge is trying to explain right now. If you see that an incredible amount has been bought in a certain price range, but for example, on this side here, there's a zero, nothing else came in, and you see the market moves down, then you know that someone has absorbed everything that in the end was bought into the market. So actually it kept going long because there were huge sellers. Yeah, but seriously, if I see such a big number at the top, I wouldn't sell.
But actually you could. Yes, you could. You definitely should. So you definitely can. Then you know exactly at a really big top operation. That means there's someone there who has passively absorbed the whole thing. And in any case, it can happen. You know what I mean? That's always just stated up front. Anything is possible. But if you see something like that, you should definitely buy against it. But there are situations where you shouldn't do that. And that's what Tom always prefers, when you see a lot of big trades there, but those trades are also happening on your side. Then you should be careful, because that means there's strong demand. They accept these prices. Then the whole thing up there, so if we're at 3,000 and here we get to 2,000 contracts, then it's still, so to speak, it's not a completed auction yet. So buyers and sellers are accepting the prices. And then, of course, something like an exhausting move can happen. But this exhausting move is actually cool because this is the next variant you can trade. Such an exhausting move is simply when we combine the whole thing with market profile. For example, with a balance profile. If the market price keeps rising the whole time with the balance shifting upward, so the balance keeps moving up. And then the whole thing, we can sketch this out technically, just draw it. The market moved up like this and also moved like this. And then at some subsequent point in time, we inevitably reach a specific juncture where, for example, on the very next trading day, the market might commence its activity right here, opening precisely at this particular spot, for instance, and then subsequently makes a sudden sharp spike. And then, so to speak, it makes a spike. And then it subsequently moves back into the following significant value area and ultimately settles here. So also considering the volume and whatever else is present, then it distinctly forms a selling tail up here, indicating potential downward pressure. A selling tail is nothing more than when, so to speak, several PBOS stack on top of each other. Then it's also a sign that a major reversal can occur.
And I tell you, you can do this much more simply, because I see a small reversal like that and it turns in a B profile, and such a B profile is always the first sign for me that there has definitely been strong and aggressive selling here. The first piece of information. The second is we have a shift in the center of gravity. And when I have a picture like that, that's just my technical interpretation. And Serge is explaining it right now in a bit more dynamic way. That's very interesting.
What's important with these Bs, as he describes it, is that not much is formed up here. So really very little volume is shown. This is, so to speak, the next derivation where you look at the whole thing on a larger time frame. So when we look at larger charts, that on a daily basis, a single print forms at the high and then moves back into the value area, basically below the previous day's value area high. And we see that a single print is formed at the top. Then that's also a good sign for a reversal. And you can also combine all of this with the footprint and see the same information to check whether, for example, there is even any activity there at all.
Let's sum it up. Let's assume that we currently have such a detailed profile. That was yesterday. Here's the VPOC. Here is the value area high and value area low. Now, above here, we have a spike that comes from the market. At the top, we have a nice selling tail and run back to the previous acceptance. Previously, you would talk about the 80% rule, which comes into play here. That means the probability is 80% that the market will return to this value. This entire value is returned again, whether you want to call it that or not. The probability is high that the market will do that again, but now comes the most interesting part. That's interesting. When you mention that, let's assume there was no more liquidity up here. Let's draw the profile. This is now the profile, so the accumulated sales of this B. Here we have a spike. Here we have a low volume node. And here is the VPOC, which is located at the important level of the previously established value area. Where do you enter there?
There are different variations. So first, you can look at it dynamically. And if you're really actively involved and see everything that's up here, you could even catch it right at the top. So really the high. Yes, but now
we're here now.
Exactly. So if we're at this point now, there are also different options. So first, you can see the whole value area as resistance. If you want to define it that way, then you also have to be careful. For example, in this case here, the BP doesn't really, if it's right at the zone, then you should be a bit more cautious. That means there are two things I consider. The market might break out again and then come back in and get sold off aggressively. Then I go short. That's one option. And if you want to be sure that it's really going to make a complete reversal now and go short for the next few days, so in the long term, then of course it's best to wait. And that's really the best moment, when it completely breaks through the previous day's low and closes there. And then on the pullbacks to the zones, like the value area low, for example, you look for the continuation to the short side.
But I want to go short at the top. I really don't feel like going short when it's already going down.
If you want to go short at the top, you have to pay dynamic attention to it. For example, this scenario with the footprint where absorption happens at the top, like here. You definitely need to know that. Then, for example, you also need to recognize that, firstly, that there's a slowdown happening as well. So that things really do slow down there.
At the top.
Yeah, exactly. It slows down and we see.
Will it then fall faster downward?
It doesn't necessarily have to be, but we should definitely see aggressive sellers to the downside showing up. It's important that there's aggressive selling, because then, so to speak, a resistance has formed here. Where something happens aggressively, support and resistance are created. It's only then that it becomes support and resistance. Are you remembering this? If you draw a line somewhere, that doesn't necessarily mean it's support or resistance. Support and resistance are based on active trading. That means only when something happens actively and aggressively there does support and resistance actually form. Of course, you can also notice something if we see it, so you have to observe when it's happening here. Really. If there's a single player selling and we have volume, then of course you'll also notice it during the pullback into the long. There are also many different approaches you can use, but the safest method is usually when the market dips into the previous value area, so that I can trade best on the pullback, or when it breaks back into the value area. That's when I have my best evidence for trend trading, with confirmation from the single print showing that someone reacted aggressively there and was able to push the price further down, so to speak. That's one way. And may I just mention the last one? Then you can add your thoughts. And the last approach you can combine is simply, I'll use a green candle as an example. If I mark this whole area here, when the market turns around, that's called absorption. When the price enters this area, like here in the example. Here, the price rises, but the cumulative data continues to move downward the whole time. So there is more buying than selling, which results in this upward movement. It can be that strong. Of course, at some point, as I said, you can combine this again with selling tails, which is important. Never combine such a divergence based solely on cumulative data divergence. You can always confirm it, for example, with footprints or the order book. If you then see aggressive sellers there and the cumulative delta drops, then that's also an entry signal for a reversal.
How much does the course we're booking with you right now cost?
It actually costs a lot, above all, but I know that's also the problem. You can give a lot away for free to the public. The problem is that people don't really understand it at first. And in the second moment, also to follow through with it. That means also having the discipline to actually learn all of this. And as I said, the advantage with us is that we also teach you discipline. And especially those who are really with us directly, they might get a little slap on the wrist if they're not doing it right.
That's why Serge has no hair. No, but jokes aside, I think what we should definitely take away is that if a price shoots up, for example, after an initial surge and then slows down, it's important to look at what the trading volumes were like. Do I have a finish or a finish option? Do I have absorption, or is there nothing down there? Is it a vacuum? Maybe that's still a really interesting question. How do you see it if up here in this upper circular area, there was no absorption and very little liquidity, especially in the last third of the remaining spike?
That's a rejection too. That's a simple rejection. They don't want to trade any higher.
Those are two different variants, right?
Exactly. One is, you can see there that, meaning no one is really willing to trade, but with, let's say, with a large absorption, you can see that someone is willing. They say the price has risen so high now, that's good for me. Then I go in, that's it.
Yeah, cool. So no more liquidity at the top, or if there is liquidity, absorption must have taken place. On the way down, it's actually good to see a lot of volume on the sell side so that we have clear evidence that the whole thing is dissolving. And then, as much as possible, and this is really important here, the context. That means you need to have planned paths for where you enter trades and where those trades are headed. And then trading is actually pretty cool. And what I always like to do is to see a really strong individual volume spike at such tops beforehand. And then, did the volume come in? And I have something up here somewhere. Of course, it doesn't really matter what kind of patterns these are. In the end, it's just about them getting exhausted. And how can we recognize that in advance? That's exactly what we've just demonstrated, I think, very impressively.
Exactly.
Simply check that using the footprint chart by looking at the market speed that we read in the order book.
The cumulative delta also shows that very nice. When the market rises, the delta drops. They actually rise quite strongly, but please, as I said, don't trade the delta divergence alone. Always use confirmation.
I would say that was awesome. I'd say there's not much more to add to that. We could now discuss thousands of setups, but what really matters to me is the deep logic behind it.
Can I summarize that well so it's included? So you know how you can best recognize reversal based on the market profiles. If you see selling tails at the top, reverse to short. At the low, reverse with buying tails. You can combine this with the cumulative delta, so you can trade divergences and then, so to speak, confirm the whole thing with the footprint, which responds through aggressive absorption or aggressive selling or buying.
That's it?
That's it.
Thank you very much.
Thank you.
I hope you enjoyed it. I hope this really showed you the simplicity of it again. You don't have to complicate everything. And I'd say let's keep going like this and share more great stories. Leave us some feedback. Let us know if you like this format or if there's something we could do differently so you feel you can really get something out of it. Thank you so much. Serge, thank you so much, and see you soon. Bye.
Bye.